Use on-chain data to understand Bitcoin. Welcome to Mr. Big. You may think a Bitcoin crash is the scary part. In a bear market, the more dangerous moment can come after the crash, when price finally bounces and everyone starts asking whether the bottom is in. On-chain data forces a colder question. Are people selling because they are panicking at a loss? Or are they selling because the rebound finally lets them escape near break-even? That is why today's video is about the SOPR family. Imagine someone bought Bitcoin at $65,000, watched it fall, and finally moved the coin at $42,000. On-chain, that movement is not just a transfer, it is a realized loss. Now imagine price rebounds and another group sells near their cost basis. Not because they believe the bull market is back, but because they finally have an exit. SOPR helps us separate these two behaviors: capitulation selling and break-even escape selling. SOPR stands for Spent Output Profit Ratio. You do not need to memorize the name. The plain English idea is simple. For coins that just moved on-chain, were they moved at a profit or at a loss? The rough formula is value when spent divided by value when created. Above 1 means the moved coins were, on average, in profit. Near 1 means break-even. Below 1 means realized loss. In bear markets, the 1.0 line becomes a psychological border. The latest snapshot is the 21st of May 2026. Total SOPR is 1.002, almost exactly at the break-even line. That does not predict tomorrow's candle. It tells us that the coins moving in this snapshot are near the border between profit selling and loss selling. In a bear market rebound, repeated rejection near 1 can mean trapped holders are using the bounce as an exit. In a strong bull market, SOPR often stays above 1, and pullbacks toward 1 can act like a confidence test. In a bear market, the logic flips. A rebound toward 1 may meet a crowd that just wants to get out. They are not necessarily chasing 10 times upside. They may simply want to reduce the pain. So the question is not only whether price bounced, the question is whether SOPR can reclaim 1 and hold it. Now split SOPR by holder age. Short-term holder usually means coins held for less than 155 days. These are often newer buyers, momentum buyers, or people whose cost basis is close to current price. Short-term holder, SOPR, tells us whether these newer coins are being spent at a profit or at a loss. In bear markets, this group usually feels the pain first. The latest short-term holder, SOPR, is 1. That is right on the 1.0 line. The useful read is not to call it bullish or bearish by itself. The useful read is to watch behavior around this line. If short-term holders keep selling as soon as they approach break-even, the rebound can run into constant exit pressure. If they can stay above 1 through pullbacks, the market is showing better repair. Long-term holder usually means coins held for more than 155 days. Long-term holders often have a very different cost basis from newer buyers. Even after a large drawdown, some older coins may still sit on large profits. That is why long-term holder, SOPR, matters. It tells us whether older coins are moving at high profit, at break-even, or in loss. It is a signal about long-term supply behavior, not a magic top or bottom detector. The latest long-term holder, SOPR, is 0.944. That is below 1 in this snapshot, meaning the latest spent long-term holder coins are not showing broad profit realization on average. But the real lesson is broader. In a rebound, if long-term holder SOPR rises, while short-term holders are only barely repairing, you should ask whether old supply is using renewed liquidity to sell into new demand. Raw SOPR can be noisy, because every market phase has a different normal range. SOPR Z-score standardizes the reading. In plain English, it asks how far today's SOPR is from its usual range. A very low Z-score can point to extreme realized loss pressure. A very high Z-score can point to crowded profit realization. It is an alarm system, not a buy or sell button. The latest SOPR Z-score is negative 0.37. That is below 0, but not in the deepest extreme zone shown by this history. So the clean interpretation is restrained. This snapshot is softer than normal, but it is not enough by itself to declare a final capitulation. The Z-score becomes useful when combined with the 1.0 line and the short-term holder and long-term holder split. Here is the practical framework. First, check total SOPR. Is the market realizing profit or loss? Second, check short-term holder SOPR. Are newer buyers still underwater, or can they hold above break-even? Third, check long-term holder SOPR. Are older coins quietly selling into the rebound? Fourth, check SOPR Z-score. Is the behavior normal or emotionally extreme? The goal is not to predict the next candle. The goal is to identify whether the market is capitulating, escaping, distributing, or repairing. The latest reading is this. Total SOPR is 1.002. Short-term holder SOPR is 1. Long-term holder SOPR is 0.944. And SOPR Z-score is negative 0.37. The short version is simple. The readings are clustered around the break-even border, with no need to force a dramatic conclusion. The next useful question is whether future rebounds can hold above 1, or whether break-even selling keeps capping the move. In the next videos, we will keep breaking down on-chain indicators in plain English: realized price, RHODL, sell-side risk, long-term holder behavior, and more. More importantly, we will connect these tools with real operating decisions: where to be patient, where to reduce risk, where to wait for confirmation, and where the data is not strong enough to act. The point is to build a repeatable on-chain framework, not chase one indicator. This video is personal research based on public data only. It is not investment advice. Remember to like and subscribe. Thanks for watching, and I will see you next time.